is Wednesday, October 8th, 2025. I am your host, Malcolm Harris. Welcome to another episode of What the Truck here at FreightWaves. Super excited to be with you all today. We got some market moves and some smart dudes on the way. Y'all, this is not Chili's, but I have a triple dipper, a trio that is going to deliver a certified classic. Could not be happier. Today, the VP of Market Intelligence at Arrive Logistics will be joining me, David Spencer, as well as our market analyst at FreightWaves, Zach Strickland. And finally, man, this guy, he's a fly guy. The VP of Sustainability and Innovation at Covenant, Matt McLelland, is going to be joining the show. But first, let's kick things off. My man, he came in at the bottom of the ninth, and he absolutely is just awesome in doing his thing. I want to kick it now to David, again, David Spencer, the VP of Market Intelligence at Arrive Logistics. David, how are you doing, man? Thank you so much for being here.
Yeah, man, I'm doing really good. Thank you for having me. Excited to hop on the call. Freight media has been a little quiet this last week. I think everyone's trying to figure out what's going on, so I'm excited to help clear up the air a little bit here with you today, Malcolm.
No, definitely. It's been a little quiet, and people are kind of like, all right, what's happening? What are we doing here? And, given your background, your expertise in market intelligence, when it comes to data, rather, and the signals, what do you closely monitor when it comes to things, when it's like rates moving abruptly or when things tend to lag? What are you looking for specifically with you and your team?
Yeah, I think, being an operator, right, like the very first data signals that we're going to get are from our own internal data, right?
Right.
If we're seeing any kind of changes in our tendering patterns, if we're seeing changes in the opportunities that we're seeing from shippers, whether that's via API or EDI, if we're seeing rate increases, if we're seeing changes in our supply and demand in terms of the trucks that we have available versus the opportunities that we're seeing geographically on the map, really that focus is internally what's going on, right? And I think then we start to shift our focus externally to some of the external data that might be giving us a little bit clearer picture of, hey, can we validate what we're seeing in our internal data with what's going on externally? And I think that's kind of been where we've been playing the last few days.
Talk a little bit specifically about the data that you see on your side when it comes to the rate up as well as the tender volume. I mean, when it comes to that FreightWaves article specifically, what kind of coincides with what you're seeing versus the article?
Yeah, and certainly we're a piece of the market, right? As I'm sure the data that you guys are looking at is as well. But we're seeing disruption out there, right? There certainly is some spot rate volatility right now, and I think it's clear that there's something going on. I really liked the way that article kicked off with those lyrics, trying to uncover what that is and what that will be. I think we're still in the early stages, right? But we're definitely seeing that rate volatility. We're seeing a bit of a shakeup out there. It does seem to coincide in that this does appear to be more of a capacity-driven event. And I think for the most part, we can align with the fact that there is a bit of a disruption happening really since that DOT regulation announcement. And we've been sorting through really what that means.
From Arab's vantage point, how much of this surge is driven by capacity constraints versus ships and shipper behavior or lane level dynamics?
Yeah, I mean, there's really, like I said, I think this seems to be tied to more of a capacity crunch than anything else. It appears that, what we've seen is some capacity coming off the road. That being said, there are large areas of the market or carriers that seem to be unaffected by this, right? So the disparate nature of this disruption is certainly something that begs for more, research and a deeper dive as to what's really going on. But it appears to be more of a capacity-driven event than anything that's, say, driven by shipper side equation right now.
Now, are there particular areas in the country, I mean, geographically or lane specifically, where there's certain spikes that you're seeing or just drastic increases or decreases right now?
I think, look, the areas that we're hearing anecdotally that carriers are wanting to avoid are the same areas where you're hearing about these, the enforcement being strong, right?
Yeah.
Oklahoma, especially on the western side of Oklahoma there where that blitz occurred last week. We're hearing, certain areas of the very north tip of Texas over to New Mexico, kind of that same stretch that we're talking about from Oklahoma. You saw those stories of what was happening in Michigan this week. I think anyone who's at potential risk here is going to avoid the areas where there's smoke, right? In the air, right, and not want to go to these areas. But that being said, we have a lot of carriers that don't mind, right? I mean, we have a very large network that if we're seeing and hearing anecdotes, it tends to be just that, anecdotes. It's not something that we're seeing very widespread yet across all carriers, across all regions or anything like that. It tends to be very specific to certain carriers or certain demographics that might be avoiding certain areas. But in scale, we're not really seeing the capacity challenges. We are seeing rate volatility, especially with some of those first carriers. But it hasn't really exposed itself to be a nationwide thing just yet.
David, when it comes specifically to your forecast and the models that you and your team are looking at, are you leveraging external like data and resources specifically, or how do you guys take all these just factors that are happening right now and kind of put this into a model that is, I mean, definitely reputable when it comes to what's happening?
Yeah, thanks. I appreciate the
Of course.
acknowledgement there. And just for those that aren't aware, I mean, Arrive Logistics puts out a monthly shipper update for free on our website, arrivelogistics.com. And on a quarterly basis, we're putting rates out there from a rate forecast perspective, putting our stake in the ground. And, right now our rate forecast is out there through 2026. And certainly disruptions like this are risks that we clarify, are things that could adjust or alter our forecast, right? No one knows exactly how a regulation is going to be written, how participants are going to interpret that, and ultimately how that's going to affect market conditions and rates. But we're not in the business of predicting that necessarily. We speak to and we acknowledge all the factors we think are risks and what impact they could have, and ultimately we try and do our best to predict what we expect the rate environment to be with the knowns that we have at the time. And so how we work those in, right? Certainly in environments like this, we're not really thinking long term about shifting our strategy just yet. Like I said, we're still in the early innings. Our focus is on how to communicate with our customers about what they're seeing, communicate with our customers about what they're seeing, how to best service them right now, how we can be of additional support. I think those are the first responses that we think about before getting into kind of putting out a new forecast. I think getting a good pulse of what's going on, how our customers' businesses are impacted and how we service them. Ultimately, that's going to be the best input to how we foresee what's coming in the year ahead.
That is such a great message because I was thinking, and it was leading me to my next point. I'm glad you kind of, threw up a softball for me. I mean, when it comes specifically to operations, right, and the strategy, is there, a huge kind of shift or a panic button when it comes to operations or getting ahead when it comes to messaging, or how does that work with you and your team?
Yeah, I mean, when these things occur, you know, there's uncertainty, right? We're looking for
Right.
validation. Is what we're feeling right now? What is it? What does it mean for us? What does it mean for our customers? And it starts with a dialogue, right? We invest in our market intelligence team, myself, my team, for a reason, right? It's not just for when it hits the fan that suddenly we're gonna pivot out of contract freight or something, right? No, I mean we have regular points of contact with our shipper partners about what's going on, an ongoing discussion, aligning on what's going on out there and how we're going to navigate this situation together is step one, right? So from a panic button, really the only panic is how quickly can we talk to these shippers, get them on the line, understand what's going on, how we help, what they're seeing, how do we compare notes with what we're seeing. That's the first step here, right? I think from our perspective, it's no time to panic. This is why we're here. We're here to help support our customers in time of need and when there's volatility, and it's time for us to do our jobs.
It's the golden rule in transportation and logistics. Communication and just getting ahead of it is always the first rule of thumb. So you guys definitely are doing that, and I kind of want to look ahead, right? When it comes to this market and what's happened in the last 72 hours or so, is this isolated? Is this like a just a little just or is this going to be more and more of the norm as we get into Q4 here?
Yeah, look, I think it's still in the early stages, like I mentioned, and honestly, at Arrive, we don't really care how long this goes or what it is or how big it gets. I think we have our mindset and our strategy, and that service our contract freight, be there to our commitments, and understand that hey, this is why we've been investing in a down market, right? When our competitors are cutting headcount and pulling back, right? We've hired 700 people this year, and that's not in a down market, right? And so that was our strategy then, and we're going to have the same strategy if the market does change and sustain into a different direction, right? Which is, make sure we're hiring the right people, we're training them the right ways, we're servicing our contract business, providing that service at scale, and continuing to focus on, servicing our customers. I think yes, if the spot market is going to be showing some rate volatility when we're there to support our customers, yeah, we're going to quote at spot market prices, just like everybody else does. But that's why we're here to provide that capacity, which we believe we have, and that investment and that strategy through the down stage of this market is going to enable us to be there and flex up when conditions evolve and change as we look forward.
A great playbook from you all at Arrive when it comes to being on offense right now. And I wholeheartedly agree with the things you were saying, right? To be on offense and to get ahead, obviously from a communication standpoint, but to also hire and make great decisions when it comes to personnel. That is really the, if not first, the second priority, because that's what makes things go, and completely understand that. Now, for smaller carriers or organizations that don't necessarily have the infrastructure that you all have at Arrive, what are some things or just you would say must-haves for them that are listening right now that you would just recommend and adopt when it comes to navigating waters like this?
Yeah, I mean, there's a ton of free resources out there, right? You don't have to be a big player to have access to information these days, right? So, this show, for example, I mean, you can log on and watch all the past episodes, right? We put out a free market update. Many others do the same. So, the access to information as to what's going on out there is readily available, right? And like I said before, some of the best information that I'm getting and best insights I'm getting right now, I'm getting from going to my sales floor and I'm talking to the sales leaders. I'm calling shippers, understanding what they're seeing sort of live and in the moment, right? So, just pick up the phone, talk to, communicate with those around you, access these free materials that are out there, right? I think that's step one. But, ultimately, everyone from a carrier perspective, especially, know your operating costs, right? It doesn't matter what market we're in, you know what you have to get to be profitable. That's your bottom line. You should be clearing that. And if the opportunity is there to make more and to chase more, that's great and take advantage of that. But like I said, the first and foremost, what you need to do is understand your financials and look at the free resources out there. And I think you can do a lot of damage.
David Spencer, VP of Marketing Intelligence at Arrive Logistics. David, thank you so much, man. This was super insightful, and I definitely understand why you were in the role you were in, because if you know, you know, and my man, you definitely know. So thank you so much.
I appreciate it. Thanks for the opportunity, and hopefully talk soon.
And before we dive in, a quick shout out to today's sponsor, Descartes MacroPoint.
Trusted by shippers and preferred by brokers, Descartes MacroPoint is the industry's best transportation visibility and risk monitoring platform. Deliver confidence with real-time insights and automated alerts to keep freight moving and your customers informed. Less risk, more connectivity. That's Descartes MacroPoint. Visibility you can trust.
Every load matters when it comes to your reputation. That's why the world's top companies rely on Descartes MacroPoint for visibility and risk monitoring. Keep customers confident, freight moving, and operations in sync. Descartes MacroPoint, visibility that you can trust. All right, y'all. Again, David Spencer just came on the show and absolutely did his thing. And we're about to zoom out. Literally, we're about to zoom out because I have a guest with me. My man, Zach, is joining the show. Zach, how are you doing today, sir?
Oh, I'm doing fantastic. Thanks for having me out. Inaugural guest appearance for you.
Yes,
Malcolm.
yes.
Let's do this.
This is awesome. I'm so
Yeah.
happy you're here. Obviously, there's big things happening right now, and let's just dive into it. I mean, from your view, the reason I brought you here is because you just understand and and you can speak to it better than I can. When it comes to this unusual behavior, when it comes to overnight spot rate surges, do you recall something happening like this historically, or?
It's rare. It actually happens every now and again when there's like this very spot market centric movement.
Yeah.
Like we see it more in a granularity, like with like I think it was last year or maybe it was 2 years ago where the Phoenix market actually kind of blew up on the spot market side before the tender data did. And that's something that happens when you have kind of this nuanced non-large account type surge on the demand side that happens sometimes. This is not that. This is a supply side issue. And it's very unique. I've never seen anything like this necessarily before, where we see normally what happens on the supply side is it starts to percolate with the contract market first. Yeah. Like the tender data tends to lead, and the contract tenders, that's where you get a shipper sending a load request to a carrier to cover. Right. They have to have a relationship. Spot market is very much like, it's a lot of small carriers out there. It's the Wild West. You remember the game
all too well. Yeah. I've been on the good side of the spot market. I've been on the awful side of the spot market.
And so traditionally, like the relationship has been the contract market breaks apart, long-term relationships starting to flux, right. And then the spot market follows by a few days. This is the reverse of that, where we're seeing, because a lot of the capacity that's influenced by this is the small operators, the owner-operator environment, the small carriers that don't have these big contract agreements, but they operate off load boards, and a lot of the transactional freight that comes just kind of like in the either, the smaller shippers that don't have consistent freight. That's what's getting impacted the most. A lot of these large fleets don't have this, that base of operator that's being impacted the most here.
Definitely. No, I have a lot of peers that are both owner operators as well as kind of on the smaller tier of brokerage. And it's crazy to see this happening in real time. And, there was some things that you mentioned in terms of data sets, whether it was SONAR, tender rejections. What gave the strongest type of early warning signs when it came specifically to this environment we're in right now?
Yeah, I have a chart actually of in spot rates versus tender rejection rates, and you can see clearly in this chart. And the spot rate one is the thin line on top. No, not that one, but the other one that you had up there. This one right here. Yes,
perfect.
So that green line that you have on top there, you can see that sharp uptick. Like rejection rates are the white down below it. And that's the percentage of loads that are being rejected by the carriers. Carriers typically don't reject freight, especially in a soft market. Typically we see, if you look at this line closely, you see the rejection rates tend to lead outside of anytime you have a story in the market, like holidays, everybody knows when July 4th is going to happen. Sure. And so these carriers are like, I don't have the capacity. I don't have the truck for you in this area. The market tends to know that's coming, so rates can increase in front of that without some structural stuff. So sometimes carriers can get a little ahead of themselves, and the rates tend to increase faster there. But then when you get the tender data behind it, it really has some force, and that's when the market can turn. This one right now, I think we're going to see the spot rate increase first. Okay. And that's going to eventually, and this is a sharp uptick. October is not a month where freight tends to explode like that.
Not at all.
If I were to show you the seasonality view of the NTI here, October is pretty much just a flat to down month coming out of September every time, outside of some hurricanes. But this one looks like it's going to lead the tender data, because what's going to happen is as spot rates increase, you're going to see these larger relationships fall apart a little bit, because financially speaking, those spot rates are going to exceed those contract rates. And once it gets into that 10, 15% above a contract rate, that's when these larger carriers are going to say, man, I gave you a deal, but I'm getting paid 20% more to do the same job.
Yeah, no, that makes a lot of sense. And it leads me perfectly to my next question for you. Are you noticing differences in like reaction speed or the magnitude amongst different modes, whether it be dry van, reefer, flatbed, or are there specific commodities that there's an uptick or a spike right now?
Not necessarily commodity driven, but regionally, like the Midwest. The Midwest, it's all over the United States. When I look at the map of things, we tend to kind of focus on Southern California this time of year a little bit. It's not necessarily that active, but right now, because intermodal's kind of taken a lot of the demand, I think the nuance of this market too is that Demand has absolutely nothing to do with this rate increase.
Yeah.
This is a pure supply side issue. And something that I've been telling the SONAR customers over the last year, and they're probably sick of hearing it from me, but it's finally here.
You called your shot.
Yeah. I mean, it's finally here. You know, Craig and I get on State of Freight and we talk about this a little bit too. The vulnerability of this market has been growing under the surface. And it's because of the supply side mechanism. It is not a demand side thing. Economically speaking, we're flattish, but on the truckload side, it's actually down significantly because intermodal has taken such a huge chunk of the demand game.
Right.
And especially on that long haul freight segment, that Ontario to Chicago, Ontario and all that going into the Northeast and all that. Shippers have had such a long time to move this freight across the country because of these trade war and the Red Sea stuff last year.
Definitely.
That they have so much longer time. They put it on the rail, get on the truck at the last minute to final it. And that's been bleeding capacity out of the market because trucks are operating at below cost for the most part. Heartland, one of the biggest, strongest operators historically, a 106 OR. So that means that a lot of their pricing is underwater. So that means they're just living off cash flow and stockpiles of cash when you see numbers like that. That cannot last forever.
I was gonna say, that's a dangerous place to be.
Yeah. So that's what we've had for almost 3 years now. So a lot of this pricing is not a sustainable thing.
Zach, now, is this going to be presenting broader shifts? Is this a flash in the pan? Kind of asked David earlier with Arrive, and he gave me his answer, but what are you thinking, seeing the charts, understanding the data, and speaking to this at a real high level?
Yeah, I think this one's a hard one to call because it's a pure supply side mechanism.
For sure.
For us to really shift, I think we actually need demand to return.
Right.
I think we need some stable to strong demand to return to make this a sustainable flip in the market. Now, I say that never seeing an environment like this in the past where supply side dynamics have already been weak. Now they're weakening even more. You know, I mentioned the tender volume index. So if we can pull up the chart of OTVI versus OTRI, this is the last 2 years. This is a very strange development. So, and the white there, that's OTVI, that's demand. Just think about it as demand. On the bottom in the yellow, that's OTRI. Typically, these two figures correlate perfectly because as demand increases, rejection rates go up because carriers are getting more strained.
Right.
It's in a more balanced environment. Demand has fallen 15% over the last year, and rejection rates have held up. That's a sign that the supply side mechanics are just so fragile. So this additional, because we're talking about an extra 5% of market supply coming offline almost overnight. And that's going to be in that kind of the spot market, transactional space more than the contract stuff. This is also like a strong thing, but we've never seen this type of thing before where that much supply and capacity comes off quick. Demand, we're used to moving fast. Supply, not so much.
Not so much at all. This is a question that I really wanted to ask you, and I love it. In your view, what are the biggest blind spots or risk in this current market in terms of data that could mislead carriers or brokers during volatile moves like this right now? And I see you laughing because I know it's a question that's interesting that is going to get a lot of traction.
Yeah, I mean, obviously, I came from I was in LTL for a long time, but I was very responsible for a lot of the procurement strategies and things because LTL outsources. So from that perspective, I was a shipper. And when I got it wrong from the pricing perspective, it was because our carrier base didn't operate well. And we got caught looking at our own internal data all the time. There wasn't a lot of external data back then, back in the olden days, before COVID, the before times. But that's what a lot of these companies tend to do. They get stuck in their own kind of seasonality. I know you worked in the space. Man, I know what happens in June. Man, I know what happens around Labor Day. The anecdotal seasonality story is what has driven a lot of the reason rates increase sometimes is purely off of expectation and not reality.
Absolutely.
So what we're seeing right now is something where, I mean, I didn't see this coming, but monitoring it, you just asked a question, is this sustainable?
Yeah.
I don't know.
That's so honest.
Yeah, I don't know, but I'm going to be watching this data like a hawk.
Oh my God.
For the next week or two. This is a down seasonal month. Like,
Definitely.
if we get any demand in the holiday season, which is coming up, and the story that I was telling a lot of our customers over the last several months is watch out for fourth quarter. Yeah. Demand side economics, they're not great. I don't see any reason that they're going to get better in the short term, but man, these shippers have been holding back their commitment on their inventory levels. They've been saying, I'm going to order the bare minimum because I don't know what's about to happen next. And if they miss on consumption in the fourth quarter, you know who they're calling first is that carrier to say, you need to get this freight out of the Inland Empire and get it up to New York City as fast as humanly possible or into the megalopolis, the East Coast population centers fast. I know because I've done this job.
Definitely.
And they are willing, well, the reason rates go up is because somebody's willing to pay for it. Yeah. And I've had so many people offer me, you're talking about, during a slow time, it's like, man, I could really use an extra penny or $1 per mile or, cent per mile, something. And in times like this, though, you see what that transportation is worth because, man, if they start missing on deliveries or they miss consumption and miss on revenue, that's worth way more than a 5% bump on transportation costs. Absolutely. And we're talking 20, 30% increases sometimes. Because when that market flips, it flips hard, because the shippers they need that freight moving so hard.
They need it moving so hard. And I was going to ask last question because I know, we got I called it earlier in the show. This is the Triple Dipper, the Chili's edition of the show today. I got 3 guests. When it comes to the next 30 to 60 days, your analyst hat, what's the biggest bet out there right now?
I think we're going to continue to see some of this volatility. This may be, it's hard for me to tell how many wheels this has, but I think I was already expecting something like this in November, regardless, because I think people are so reactive right now. They've been in defense so long that we're going to see these. We've already seen it. We've already seen pockets, but it's happened in off-season times. November, the sense of urgency for a shipper escalates exponentially. It's not February where, we're just getting inventory ready again and, I need it moving, but they have to have the freight there. So I think we're going to see this increased sensitivity, and this happening now in October is only going to make that wheel a little bit slipperier.
100%. Today's name of the show is Market Moves with Smart Dudes, and you are a smart dude with all the market moves. Again, Zach Strickland, market analyst here at FreightWaves. Zach, thank you so much for coming on the show.
Yes,
man.
sir. Thanks for having me.
Oh gosh, y'all, that was so awesome. Just being able to hear it from the source. I mean, I told you guys that I have a 3-pack, and the next guy coming up, the final guest on today's show, this is a fly guy. I told you guys once, I told y'all twice. This guy is amazing. This guy is the future. He is future man. Come on in here, man. Matt McLelland, my man from Covenant. Hello, sir.
Right down the road.
Right down the road. How are you?
I'm good. It's always good to be able just to get a quick last minute phone call and say, come on down to the studio.
Come on down to the studio, and I'm happy you're here. You smell great, by the way.
Hey,
not saying Zach smelled bad,
I had a shower an hour ago.
You smell great. I'm just saying.
I had a shower an hour ago.
So
hey, by the way, welcome to the show.
It's good to be here.
How many episodes is this for you?
We're 10 deep. 10 episodes in. Can't believe it. I'm
That's
super
great.
happy to be here. So, so getting to it, you just heard from obviously David and Zach. From your perspective, break down this and how this kind of looks right now in your lens right now.
So, the world that I live in every day, Malcolm, I get up and I'm blessed and fortunate to get to come to work every day and think about long-term, big picture.
Right.
What does the future of freight look like? What kind of investments do we need to be making, over the next year, over the next couple of years, following trends, looking at what customers are asking for, looking for what customers are willing to spend, and trying to sort through a lot of the noise. And so, my role is not as affected by, small changes in the market. Now they are in the sense that carriers like us can't invest in sort of prototypes, proof of concepts, even alternative assets to diesel, without there being, I mean, these are significant dollars. These aren't just like changing from Google Docs to, Microsoft 365. I mean, we're talking about like big changes that require, lots of planning, lots of ROIs. And so, we're a little bit immune to small market changes, but, but bottom line is if we're not making money, it's hard for us to sort of, spend time looking at those types of things.
Now, looking at clients and customers that you work with, I mean, is there kind of a pause when it comes to initiatives like, sustainability, innovation? That's always going to be at the forefront. But whenever you're speaking to partners and vendors, is there pause right now, or is there more of a double down type of effect? What do you think?
It's not a double down. For sure. And I'll tell you, Malcolm, it's interesting because, in my role, I kind of have a foot in sales and a foot in marketing and a foot in research and a foot in operations. And so when I'm pulled into a lot of our customer meetings, they all want to know, like, what do you see coming? What sort of things should we be thinking about? Obviously, they have sustainability initiatives they want to plug into. It's what's called our scope 1, their scope 3. They've got goals that they want to meet in the future. So they like talking about it. Now, actually pulling the trigger and making some of those investments, not so much, because at the end of the day, diesel is king. I'm sorry if anybody out there doesn't like hearing it, but diesel's not going away anytime soon. And, it's reliable, it's abundant, it's available at truck stops, and, it's the easiest way to get things from point A to point B. Renewables and alternatives are sort of on the way, and they're, different ones have different sort of risk tolerances. And, we've got some customers that are experimenting. In fact, we could probably talk about what some of those things are. But them pulling the trigger and actually saying yes to some of the ideas that I talked to them about are, doesn't happen as often as I would like. I'll say one last thing.
Of course.
It's interesting. If you can't have these conversations with customers, it's hard to keep a seat at the table. Definitely. And so, that's one of the reasons why I get involved in, quarterly business reviews, those sorts of things.
Sustainability, innovation has been your baby at Covenant.
Yeah.
Right? This has been you. Where does this fit right now in the conversation, given the market, given the current environment that we're at in terms of freight?
I'll answer that a couple different ways, Malcolm. Yeah. First of all, one of the things I love about my job, and I'm fortunate I get to speak quite a bit, and but I love having, let's see the right way to say this. I love having conversations with my competitors.
Absolutely.
I just read an email while I was sitting on the couch over there while you're talking to Zach. Reading a note, do a call out to my friend Jared over at JB Hunt.
Shout out to Jared at JB
Jared
Hunt.
does what I do at JB Hunt, but
Okay.
we have been talking about a technology that both of us have been looking at. Right. He needs other people to use it. I need other people to use it, because if we're not all using it, that company, won't be able to produce that product. And so when we have good experiences, a lot of times we want to share. So we're competitors, and there's a lot of things about pricing and customers, obviously, that we don't talk about. But when it comes to advancing initiatives and technologies that are supportive to sustainability initiatives, oftentimes customers that we share, then it makes sense for us to roll up our shirt sleeves and sort of share some of that data. Does that make sense?
No, it definitely makes sense.
Yeah. So it's a great role to have, when I can go out and have a meal, have a cup of coffee, have breakfast at a show with somebody that I might be competing against for the next big deal.
That's awesome. Now, I've always looked up to you from afar, right? Because
we live right here in Chattanooga together.
Yeah, I know.
Why are we hanging out more often?
I know, we need to. Like we really are going to be pals. And I just wanted to say, seriously, the work you've done is very admirable. So really appreciate you. And I want to know, in terms of how you've got the nickname Future Man. Where did that come from?
Oh, Future. Where did that come from?
Future Man
I was at ACT Expo.
Okay.
On a panel discussion, and I think my friend Eric Neandros might have said it. He was moderating the discussion, and I was talking about something. I call them science experiments. So these are there's things that the OEMs are doing today, and there's things that startups are doing today. And science experiments are things that are way out there on the horizon. And I like tracking those. Now, my boss says, Matt, I need you to keep your eye on things that are a little bit more in our future, but
Definitely.
I reserve 10% of my time, I guess, to sort of look at those things. And so I think that's probably where it came from, was that sometimes I can, get excited about things that are maybe 3, 4, 5 years away, something like hydrogen that's, always been 10 years away for the last 30 years, kind of thing. So yeah, that's probably where it came from.
Awesome. I was gonna ask, and the name Future Man. Where in the future do you see freight? Whether it's that 3 to 5 year time span that you just mentioned, where do you see the future? What has your eye right now?
Um, you know, again, and I've got a lot of people that I told I was going to be on the show, so a lot of friends of mine in different industries that are watching this. For those of you that are selling electric vehicles and other types of things, I am a big fan of where alternative fuels, the role they're going to play in our industry. However, diesel's not going away anytime soon. And, that's not that I own stock in Shell or Exxon or diesel producing companies, but it is reliable, it's there, and right now it's what customers are paying for. Now, I have a lot of admiration for my friends that operate the private fleets. Just to drop some names here, my good friend Adam Buchenbach, who does fleet innovation at Pepsi, or Ken Marco, who does fleet innovation at US Foods. These are people that have private fleets. They live in a very different world than I do on the for-hire side. And so, they get to introduce lots of different products into their fleet in addition to diesel. Adam and I talked a few weeks ago. He's got some RNG trucks, some B100 trucks, some battery electric trucks. They're experimenting with a couple of technologies that I can't really talk about, but they get to have a portfolio of solutions. For those of us on the for-hire side, a little harder to do that. Definitely. I can't go out and invest in, say, 5 CNG trucks unless I have a customer willing to write that check, commit to those lanes where that fuel source is available. And so, until those types of commitments come in, Malcolm, we're sort of using what we have right now, which is diesel.
Definitely. No.
So one thing we're doing that's interesting is we're running 100% biodiesel in one market with 3 trucks. It's going great. We've been doing it for about 7 months.
Okay.
100% biodiesel is a zero emission event running an internal combustion engine. And I could talk for a long time about the nerdy nuances of all that. You basically bolt a device onto it that heats the fuel up to operating temperature that allows the truck to use that fuel just like it was B20. We have, while those trucks are running that fuel, they're running about 85, 90% of the time on that fuel source. It's a zero emission event. And so, for that particular customer we're operating those trucks on, they are near zero emission for those particular assets. They're paying a little bit more because the fuel is just a hair more expensive. Right. And that asset that we had to bolt onto the truck is a little bit more expensive. But at the end of the day, it's going great.
Talk to me a little bit about more initiatives with the logo on your shirt. If you guys can't see it, he's repping today, Covenant. Some additional initiatives that are happening at Covenant right now.
We are, what are some additional additions? We're testing. So, I'm on the board of directors of an organization called the North American Council for Freight Efficiency. Okay. And one of the things we're known for, so this is a nonprofit industry trade group. There's a lot of us in the carrier space and the OEM space that are on the board of directors, but we advocate for the future, right? So full decarbonized operation of assets, but there's this thing called the messy middle, right? And we're in diesel over here, zero emissions over here, and the messy metals, all the technologies and all the products in the middle, they're going to kind of get us to where we want to go. Right. Things like aerodynamics and electric APUs and better engines. And, there's a long list of things in that category. But at Covenant, we are been really successful with lowering our overall emissions, our idle percentage, by using electric APUs. And so what that is, Malcolm, is a device that you bolt onto the truck. It's not cheap, but it allows that truck to charge a battery bank while it's moving during the day so that the driver can run their air conditioner, heater, CPAP machine, microwave, those types of events at night when they're sleeping without leaving the engine idling. So fuel savings, emission reduction, the drivers sleep better at night, because you don't have the rattle of the truck. So maybe a better rested driver is a safer driver. And so we're we're really trying to get our idle percentage down through the implementation of those assets. That's one of the things that's pretty exciting. It's nothing new. It's been around for a while, but.
Definitely. I appreciate that. And for you kind of breaking that down for the listeners. And when it comes to technologies, I mean, Covenant plays a big role in terms of, I mean, all different types of modes, but specifically temperature controlled has always been notorious when it comes to Covenant. What is changing day to day when it comes to tech, specifically with operations, when it comes to drivers and how it impacts customers?
Refrigerated is it's just a different trailer, so there's not a whole lot of difference in that. We have looked at solar panels on the top of trailers, and
really,
using because they mostly run on diesel. The refrigerant system does, but not a whole lot of really interesting things coming, in that market. There is a company out in California called Range Energy that is making an electrified trailer that not only it has a battery pack on it and electric axle, so it can not only push the truck, but it has the potential to sort of provide some electrical functions to something like a refrigerated unit. Refrigerated, probably not the most exciting segment of the market to be tracking. We have a secure freight division called AAT, which actually we purchased years ago from some guys here in Chattanooga that started that. That's high value, high risk, super secret type of stuff that we haul. That's been really interesting and successful for us, hauling things for the military or for, other types of companies. That's been something that's been a lot of fun to watch and continue to watch that grow.
Awesome. Now, final question.
Yeah.
What is next for the certified badass future man, Mr. the General Matt McLelland? What's next, man? What's on the docket?
You mean like hang gliding this afternoon when I get off of work?
No, you're not. Are you really?
I've been doing that for 27 years.
You're so cool. I would literally probably.
Yeah, but I know that's not what you're asking.
No. I'm just saying in general, like what's next for you? I mean, both
going to Antarctica in January.
Really?
That's a little out there.
That's a little out there.
I know.
Sure.
I know. There's a long story behind that. So I'm tracking this technology right now. A little bit of a shout out to a startup that's pretty mature now. It's called Remora. So Remora is a fish that sucks onto the side of like a shark or a whale and is basically. It lives off of, eating all the different algae and things that are on the outside of that fish. Well, this company, Remora, attaches this device to a truck exhaust pipe and will absorb up to 92, 93% of all the CO2 that's coming out of the tailpipe, turns it into liquid in real time, liquefied CO2. So it takes the CO2 out of the exhaust pipe. It also takes some NOx and particulate matter out of that as well. Stores it in a tank. That tank can be unloaded at some point in the future. And there's actually a monetary value with liquefied CO2. It can be used to make concrete, steel, some other types of products. They were successful in getting that up and running. And then but it's heavy and it's expensive. And as you know, the more weight you put on a truck, the less freight you can put in the trailer. Yeah. So what they have pivoted to temporarily is rail. So now they've got this device on a train. Right? So the train goes from east to west. Let's just say New York to LA. I don't know if there's actually a route from New York to LA, but it's going east to west. If you could absorb 90+% of the CO2 from that train and capture it in tanks, and when you get to the other end, sell it for a profit, you could have near zero emission delivery of freight, intermodal, right? And doing something for the environment because you're capturing this byproduct, you're monetizing it, and you're preventing that liquefied CO2 from being mined out of the ground in the first place, which is another sort of longer part of that story. But if Remora is successful with this in the rail industry and shippers can pivot some of their freight from trucking to rail, that's something that we need to keep an eye on.
Matt, I don't know if you did this on purpose, but normally I have this thing called the road ahead, which tees me up for guests that are happening on the next show. But now we're actually changing it to the rail ahead. Guys, you guys have the tracks ahead for me that you can pull for our guests coming up. We're going to have Ian Jeffries, that's going to be the president and CEO of the Association of American Railroads, joining the show on Friday, as well as Carrie Gonzalez, the president and CEO of MXV Rail. Of course, joining me today on the show, Matt McLelland, and all my other guys with me as well. I am Malcolm Harris. It has been another episode of What the Truck. It's been real. It's been fun. It's been real fun. We'll see you guys on Friday. Let's get after it. See ya.